What just happened to gold? January 29, 2026 will be remembered as a historic day for the gold market. It was one of the most violent trading sessions ever recorded. Gold prices exploded in a matter of hours. The market shattered multiple all-time highs. Gold surged to an astonishing $5,500 per ounce. Traders around the world watched in disbelief. The rally looked unstoppable. Bulls were firmly in control of the market. Momentum was extreme. Social media was flooded with gold price alerts. Headlines screamed about a new era for precious metals. Many believed gold was entering price discovery mode. Fear of missing out spread rapidly. Buyers rushed in at any price, but then everything changed. The rally suddenly stalled. Selling pressure emerged without warning. Gold reversed violently during the U.S. session. Prices collapsed from their highs. The same market that inspired euphoria delivered panic. Volatility reached extreme levels. Traders were caught off guard. Positions were wiped out within minutes. The question became unavoidable. What caused this historic reversal? Was this a major top for gold? Or was it just a temporary shakeout? Could this move actually strengthen the long-term bull trend? Today we break it all down. This video focuses on market mechanics. We analyze facts, not emotions. We examine global gold markets. We focus on US trading dynamics. No hype, only analysis. Let's rewind to the early hours of January 29th. Gold was already trending higher for weeks. Inflation fears were persistent. Central banks continued aggressive buying. Geopolitical risks remained elevated. Investors were seeking safety. Gold benefited from long-term uncertainty. Technical momentum was building. Key resistance levels were approaching. The setup was explosive. Overnight news added fuel to the fire. Reports of rising geopolitical tensions surfaced. Details were unclear, but fear was real. Markets reacted instantly. Gold buying intensified. As prices broke resistance, algorithms activated. Automated trading systems chased the breakout. Buy orders flooded the market. Liquidity thinned rapidly. Prices accelerated vertically. Short sellers were trapped. Stop-loss orders were triggered. Margin pressure intensified. Shorts were forced to buy. The short squeeze began. Panic buying fueled the rally. Each new high attracted more buyers. Technical indicators went extreme. Momentum traders dominated price action. Gold reached $5,500. At that moment, sentiment was euphoric. Many believed gold would hit $6,000 next. Analysts rushed to update forecasts. The rally looked historic, but extremes never last. As U.S. markets opened, behavior shifted. Large institutions assessed risk. Profit-taking became tempting. Gains were massive. The reward was already captured. The first wave of selling appeared. Prices dipped slightly. Algorithms detected weakness. Sell orders followed. Momentum reversed. Late buyers panicked. Stop-loss orders triggered again. This time on the downside. Volatility exploded. Gold began to fall rapidly. U.S. stock markets were also unstable. Equity indices swung violently. Losses accumulated quickly. Margin calls increased. Traders needed liquidity. Gold was one of the most liquid assets. Profitable gold positions were sold. Forced liquidation intensified selling. Correlation across markets increased. Risk-off behavior dominated. Then the US dollar strengthened sharply. Demand for dollars surged. Safe haven flows shifted. Dollar strength pressured commodities. Gold faced additional resistance. Treasury yields moved higher. Bond markets were price risk. Higher yields attracted capital. Opportunity costs of holding gold increased. Investors rotated assets. Rising yields hurt non-yielding assets. Gold struggled to compete. Macro forces aligned against gold. Selling accelerated further. The decline became violent. From peak to trough, losses were massive. Confidence was shaken. Traders questioned sustainability. The market entered shock mode. Emotions ran high. But one day does not define a trend. Long-term fundamentals still matter. Central bank demand remained strong. Global debt levels remain extreme. Inflation risks are unresolved. Geopolitical tensions have not disappeared. Currency debasement fears persist. Gold's role as a hedge remains intact. The rally showed true demand. These levels were reached for a reason. However, technical damage was done. Overhead resistance now exists. Trapped buyers may sell into rallies. Volatility will remain elevated. Patience will be required. The market needs consolidation. Strong support levels must hold. Buyers must regain confidence. Stability must return. Only then can gold move higher sustainably. The coming sessions are critical. Watch price reactions carefully. Watch volume behavior. Watch dollar movements. Watch bond yields. These forces will guide direction. A deeper correction is possible. A renewed rally is also possible. The trend is undecided. Risk management is essential. This event will shape 2026 expectations. Gold has entered a new phase. Volatility is the new normal. Opportunities and risks coexist. Discipline will separate winners from losers. Now the discussion turns to you. What do you think drove this move? Fear and geopolitical panic, algorithmic momentum, institutional profit-taking. Was the sell-off inevitable? Or was it exaggerated by margin pressure? Is gold preparing for another leg higher? Or is a larger correction coming? Share your perspective. Drop your analysis in the comments. Let's learn from each other. Markets reward preparation. Markets punish emotion. Knowledge is your edge. If this breakdown helped you, hit like. It supports the channel. Subscribe for ongoing market analysis. Turn on notifications. Stay ahead of the moves. Gold remains one of the most watched assets. 2026 will be a defining year. The story is far from over. Volatility creates opportunity. Stay informed. Thank you for watching. Trade wisely. Stay disciplined. Respect risk. And stay focused. The gold market never sleeps. Neither should your strategy. Prepare for uncertainty. Prepare for opportunity. Prepare for 2026. This is not the end of the gold story. It may only be the beginning. The next move will be decisive. The world is watching, and history is being written. Gold has shown its power. Gold has shown its danger. Balance is critical. Timing is everything. Knowledge is protection. We will continue tracking this market. We will analyze every major move. We will cut through the noise. We will focus on facts, and we will stay objective. Thanks again for your time. See you in the next update. Stay safe in the markets, stay sharp, and stay informed. The gold story continues. Volatility defines this era. Discipline defines success. 2026 has just begun, and gold is at the center. This was January 29, 2026, a day that changed everything. A day traders will never forget, a lesson written in price action. History in motion. Until next time, keep learning, keep analyzing, keep questioning, and keep watching the market.